U.S. stocks suffered their third straight session of declines and second straight week of losses Friday, as fears grew that the Federal Reserve's battle against inflation would push the economy into recession. The Dow lost a little less than 1%, the S&P 500 dropped more than 1%, while the Nasdaq ended roughly 1% lower. Stocks have been under pressure since Fed Chair Jerome Powell this week signaled more policy tightening ahead, and the central bank projected that interest rates would top the 5% mark in 2023, a level not seen since 2007. David Spica is President and Chief Investment Officer at Guidestone Capital Management.
Today's action, we think, is really a continuation of the response to the Fed meeting. I think initially the market saw Powell's comments as dovish when they were not. He said that inflation needed to fall convincingly before there'd be a pivot, before there'd be a rate cut. And the market is finally starting to take that into account. It's clear that the Fed is not done. They're going to continue to raise interest rates, more likely than not push us into recession. And that's the only thing that gets us anywhere near that 2% inflation level that the Fed has as its target.
Shares of Tesla extended losses Friday as CEO Elon Musk faced fresh backlash related to his ownership of Twitter after he suspended at least 5 journalists on the platform. Shares of Meta Platforms rose after J.P. Morgan upgraded the stock to overweight from neutral, and shares of Adobe gained 3% after the Photoshop maker forecast first quarter profit above expectations. General Motors lost nearly 4% after its robo-taxi unit Cruise faced a safety probe by U.S. auto safety regulators, and shares of Goldman Sachs fell about 1% following reports the investment bank plans to lay off thousands of employees as it positions for a weaker U.S. economy.